let's talk about the three disruptive forces for the next year and even the next decade. And you've seen this before because we've been talking about this all through 2025. Nothing changed. Not much has changed. I don't think not much will change in 2026. The three most important factors: US-China relations, de-dollarization, and AI. The reason to put this circular arrow in the center is to show you these three things are actually interrelated. Now let's take those three things and give an outlook for 2026. For US-China relations, I expect things to get worse, not better. I expect to have some thunderstorms or even some super typhoons in US-China relations in 2026 because of the midterm elections coming up, because of US and China continue to engage each other in these strategic competition, or in some cases, trade war or tariff wars. That's not going to change. That's not going to end. Even though we have the news today that there may be some truce, but we all been there before. They said we have truce, then suddenly one side decided to impose new restrictions. Exactly what happened a month ago. Long term, also do not expect things get better. This is a divorce between the US and China. It's not a simple couples fighting. What do? If we cannot take a view on which side will win, why don't we bet on both horses? Because US and China are uniquely different, inherently different. They offer different opportunity sets, and why don't we just invest in both? So you need to invest in both US and China because the outcome of this competition is unclear, and they also offer very different opportunities, which I'll talk in a second. De-dollarization is not going to change, and it will continue for next year and for the next 10 years. It's a long-term secular trend. On AI, we are seeing some cloud gathering in the near term. This is not the stock price speaking. If you look at the stock market, the market telling you all things are fine. But not all things are fine. Long term, we're still bullish. We still have high conviction. Just next year, prepare some small headwinds, possibly some hiccups. Positioning for 2026. I talk about the three forces that are going to drive the market in 2026: the US-China relations, AI, and de-dollarization. How should we position 2026? This is a very preliminary conclusion. In the US, we will stay invested in AI and the defensives. I just talk about the defensive as an important hedge against AI, or even just a hedge overall for geopolitical risks or for all kinds of unforeseen risks. We also like energy, continue to like energy as a hedge against geopolitical risks, and also beneficiaries of the increasing demand from data centers and AI. Energy is a great play for those type of applications. In China, you also need to have both. Right? So AI plus defensive, that's always a good combination. That's our barbell strategy. Let me say this another time. The barbell strategy dictate both our US and China investment strategy. For China, we also like something called the tourism, Macau gaming stocks, and Trip.com. And Trip.com is interesting because it's actually both a tourism play and an AI play. I can talk more about that if you're interested. Potential new themes in 2026. And this is also what we missed in 2025. I said earlier that we cannot be right on everything. We cannot make all the money off the table. We've been right on certain things. We'll make decent money this year in our model portfolio, but we also missed a great number of things. One of the things we missed is nuclear energy and related materials. That's something we will go deeper into 2026 as soon as possible. So please follow us. Please ask us questions in the future when we launch our report or core recommendations there. I think there's some really interesting names and ETFs we can look at. Aerospace and defense. That's a geopolitical risk trade, maybe related to Donald Trump, maybe just related to overall shifts about how things are changing globally between countries. But there's also one caveat here, which is the success of Chinese EV makers are now driving European car makers to this business. That is one business, the defense industry, that could not possibly outsource to China, could not possibly import everything from China. So that's a national security matter. That's an economic matter because European and Japanese companies need this business to counter the loss from competing with Chinese industrial companies. So that is a booming industry for several reasons. Europe will continue to invest in these areas and continue to subsidize. Gold mining, I mentioned earlier, is something we missed this year. And I think it's interesting because it has attributes of both gold as a commodity and as equity. I mentioned earlier that we've been overly cautious on equity, so we missed the equity rally. So perhaps if we are wrong again on equities being too cautious, we can use gold mining equity stocks as a way to catch up at both angles. And lastly, on the new China consumption, it's a very interesting story now that overall consumption in China is not changing much. In fact, the latest numbers, the China's consumption has entered the lowest month in September. 3% growth only, the slowest month year to date and the slowest month in almost 12 months. Okay, but if you look underneath the 3% growth, there are a lot of interesting secular structural changes within Chinese consumption, like online, like gold jewelry, like things have emotional value, attachment to it. Not necessarily practical things, but things like toys or tourism. That's another consumption theme that we've been sharing with you and making core recommendation about that fits under the new China consumption. And if you look at Chinese GDP today, it is still predominantly driven by domestic consumption. So that's a very important matter. We'll continue to find new ideas and new themes for you in the near future. Just to remind you how important this US-China relations are in understanding the markets and finding opportunities and protecting yourselves in terms of your investments. Thanks again, everyone, for participating, and I look forward to talking to you for the next CIO series.